So here's a brand new AI that we just launched. So let's say I go to the website and say build with AI, right? I could ask it, so I could do things like I could ask it questions now, and I could actually talk to this thing and do research. So how about, this is something that I've been thinking about quite a bit, is how do we make a bot that will handle it if the market melts down, right? So that's something that I think would be quite important going forward, especially we saw the market meltdown basically over the past couple of weeks. And, what can we do to prevent that? What kind of strategies can we do? So let me ask the AI, right? What kinds of strategies would be good if the market melts down like it did the last few weeks? I basically asked it. So for those of you just tuning in, we built a put option trading bot because we're looking to do something like if the stock market falls, we want to be able to profit off of that. So we built a bot to do that. And I actually just asked the bot, I said, you know what, back test it over the time period when the market fell this year and actually figure that out. It figured out, this is the time that it fell. It's doing it from February till May, and we're running this back test. So here's what we got. It says, in a market meltdown, the goal is to profit from falling prices or move to safety. While buying put options is a classic manual strategy, automating options can be complex due to liquidity and expiration management. Here are 3 robust alternatives we could do right now. Inverse ETFs, long, short trend following. We can definitely automate anything. Asymmetric risk reward. When you short a stock, your max profit is 100%, but your risk is infinite. With puts, your risk is capped at the premium you paid, but your profit potential can be 500%, 1,000% or more. There's explosive gains on gamma as the market drops, right? The catch for automation, while puts are mathematically the best crash protection, automating them is significantly harder than trading stocks. We can handle any kind of automation. Don't worry about that, about complexity. All right, let's see. Here's a blueprint for a dynamic put sniper designed specifically to capitalize on multi-week meltdowns. Awesome. Why shorter options decay too fast. 30 to 45 days gives you the meat of the move without fighting rapid time decay. This is very interesting. Strike price is saying we want to have a delta of negative 30 or negative 40 out of the money. Why? These are cheaper than at the money puts. If the market crashes, the delta expands towards -1. Okay. In a meltdown, you put your put option will go deep in the money very quickly. The rule, if the option delta hits -70, sell to close and roll down. Buy a new put option that is again out of the money. Okay. So what do you think about that? Put it into the comments. Let me know. I respond to all of your comments. So I'm very interested to hear what you thought about the video and what do you want to see next. And of course, if you're interested in any of this stuff, go check it out at botspot.trade.